My name is Nick Sean. I've made millions of dollars trading the past 6.5 years of my trading journey in FX, crypto, and stocks. And in this video, I'm going to show you why I took a trade today and why I risked $45,000 on this trade that I technically took yesterday, but we'll go ahead and get into it here. I'm going to share my screen here. I'm going to put this little beautiful tile of me here. So it was a trade. I shared the update here in this free Telegram channel. This is a free Telegram channel I've been running for the past, it's been like 6 years now since I got profitable. Summer of 2018 is when I've been sharing this. It's about a year after I got profitable. 61,000 members. You can join with the first link in the description. You can literally follow all these trades and analysis that I'm sharing right now. You can follow them all in here. I post stuff like this, so like potential trading opportunities, little quick reasons. All of it's very simple. It's very brief. There's nothing complicated at all about it. But anyway, here's a trade I took. So I am short on this. This is USD MXN, the US dollar versus the Mexican peso. And I got short. I entered a sell position and there was $45,000 on this, or like 40,000 right now, but I perhaps might add to it and a little bit more depending on what happens. So I entered yesterday and then my stop loss is somewhere up here. My target is about right here. You can actually see my positions. This is a Nick's Trades group that I call these trades in. And you can see my positions all right here. And you can see the entries right here. So I started the positions and layered in and added in until it was $40,000 worth of risk. Now, why did I take this trade? So a lot of people are like, why would you take this trade, Nick? I don't understand. So first things first, a lot of trading, once you do get profitable, it comes from intuition. That's just the bare bones truth. That's the non-sexy answer. People just, once you've been doing it long enough, you get enough experience to tell you like, oh, I think that might go down, so I'm going to sell. And that's the whole reason. So let's break this up into a little bit more digestible, kind of easy to understand and easy to educate pieces. Nothing I say in this video is financial advice. Do whatever the hell you want. I'm not a financial advisor. Trading is risky. Most people lose money. And with that being said, here's why I took this trade. Price had a huge move in one direction with this little huge spike up here. I'm on the 4-hour chart and 1-hour charts where I do most of my analysis on. Specific time frames don't really matter. People make a big deal about, I do the 4-hour trend and the 1-hour entry and the 15-minute candlestick pattern. I don't do any of that. I just literally, I look at the 4-hour and 1-hour. Sometimes I look at the daily, sometimes the minute 15. It just kind of depends on the situation, but most of the time I'm on the 4-hour and 1-hour chart. You can do this on any time frame. I just think it works better personally on the 1-hour and 4-hour. So price had a huge move up and it pulled back. Then we had another huge move up. Now, whenever we have huge moves in one direction with very little to no pullback, you generally see price sweep back the other way. And I'm not talking about with small candles like this right here, how it went all this leg down right here with small candles. I'm talking about shit like this right here, where it pops off and goes crazy fast in one direction, and then it kind of pauses. Then you generally see a move the other direction afterwards. That's what happened here. We had a huge spike past up this zone a couple days ago. We had a little bit of a pullback. Then we had another huge spike up that took out the high. Whenever you're trading, one thing you'll notice is that price tends in an uptrend to make a higher high, higher low, higher high, higher low, higher high, higher low. And it just keeps doing this over and over and over again. When price knocks out a recent high, what generally happens is price falls a little bit. Does this happen every time? No. Is it really freaking subjective? Yes. How far back does it pull? I don't know. It just kind of depends. Sometimes it'll only pull back a little bit, like 10, 20%, and then rocket back up. Sometimes you'll have a 50% pullback or more. It just kind of depends on the context and the price action. And even if you get everything right, you still can never predict exactly what will happen. But the whole idea is that when price goes really far in one direction, it's just likely to pull back at some point. In general, a lot of the time, meaning more than half the time, provided you've gotten the context right. Now, the context you'll understand after probably a couple years of trading, so just go get more experience. Stop watching YouTube videos about trading. This just hopefully will accelerate the learning curve for you and shorten the learning curve. Plus, like following my trades in the free Telegram channel, link in the description if you just want to follow like the trades I take and share and everything. But with that said, this is one of those things where when price goes really far in one direction and you wait, and then you enter after that has occurred, then you put your stop loss really far away where price is just very unlikely to hit because it would have to travel like ridiculous amounts further to actually hit the stop loss. Like let's look at this from this perspective, right? This is what the norm was. I'm going sideways here. We had a huge move up. then another huge move up, and then another huge move up. Like from all this sideways price action to have this much explosive movement, it's just really overextended to the upside in my very humble opinion. Whenever stuff like that happens and you've waited for entries like that, you're entering at a location where the market has already gone really, 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 really far. And then a move to the other side, in this case, a move downwards, even if it's just a simple pullback, is very likely. Now, I like entering trades where my stop is very unlikely to get hit. How do you know where you're putting a stop loss where it's unlikely to get hit? Experience and getting some data and metrics as it relates to your trading strategy or your approach or your nuanced, subjective, discretionary, intuitive-based trading approach. It just all depends on your experience and your data. So keep collecting that. That's the best way to learn trading, is just through getting experience. And if price were to continue all the way up here, I've left myself a little bit of room in terms of position sizing where I can add up here in drawdown, anticipating that if it didn't bounce here this first time, it might bounce here. And then if it bounces here and then pulls back a little bit, I can make profit on my second positions and I can close my first positions somewhere around break even, perhaps, if this occurs. Now, more than half the time when I enter, price goes into profit. Around 85% of my trades over the past nearly 4 months end in some form of profit. As a matter of fact, I've only lost 3 trades out of like almost 30 trades that I've taken. So my win rate's like 85 to 90%, like somewhere close to that. And again, all this is tracked in the Nix Trades Discord server, like live every single day. I share my trades. I share the full updates, the entries, the exits, the management, literally everything. It's very, very simple. And I only take a few trades a week. It's not complicated stuff. It's very straightforward. So in terms of this trade, I've risked $40,000 on this, and I put the stop up here where I think it's unlikely to get hit, and I put a target of a 1-to-1 risk-reward ratio. Do I always hold to the stop and target? No. In general, I don't hold to the stop and target, actually. I'll only hold to the stop if it's like one candle spikes up there and there's just no way for me to manage it. Stop loss in this case is kind of just an emergency. And then I'll hold the profit target if we get a lot of, say, bearish candles going in my direction and it looks like there's no momentum slowdown, then I'll hold. But in a lot of cases, like say it pulls back, then it stops up here and it starts to make a higher low and it starts to kind of bounce and starts looking like it's going to go up. In that case, I'll just probably close it right there. 50% to 75% of the total potential profit, like what it could have been. And that's that. Trading is trading, right? Let's look at a trade that I'm looking to take, right? Because this, who knows if this will work out. Right now it's in like 5K a profit. Yesterday it was like in $11,000 of profit. But I'm just kind of sitting on this and waiting it out. We'll see if this works. You can check the timestamp on this YouTube video if you're watching this a couple months from now or a year or two from now. And you can just see for yourself where this ended up going. We're on June 11th, 2024 right now. So there you have it. You can see what ended up happening. And also, just because it goes up or down does not mean that I hold to the stop loss or the take profit. There are many things that I will do to proactively manage a trade that starts moving against me. So even with using a 1-to-1, I will tell you right now, none of the 3 losses I've taken in the past 4 months have actually hit stop loss. They have all been partial losses. Like if I'm risking 40 or 50K, then I closed the loss at like, for example, the trade I closed last week at a loss was only like 12K and I risked like $40,000 on that. I closed that trade at about a fourth of what the total actually allocated risk was. So there's a lot of things I can do before it, but you'll be able to see which way it went if you're checking this in the future. Here's another trade I'm looking to take, Euro GBP. This is looking mighty sexy if I do say so myself. Why is it looking sexy? Do some very, very basic market structure analysis. What does this fancy term means? It just means looking at the damn highs and lows. That's all. Price went down, made a low here, made a lower high there, made a lower low here, made a lower high here, went down and made another lower low here. I just think that pretty soon price is going to have a movement to the upside. That's it. That's the whole analysis. Price is going down and then up, then down, then up, then down. I think price might go up. Again, a lot of nuance and intuition comes into this. I've been trading for 8 years. I've been profitable 6.5 of those years since summer of 2017. Then I started this Telegram channel a year after that in the summer of 2018, and I've been just sharing my trades and analysis and insights live every single day since. I just have a feeling, I have a little bit of a hunch based on over 8 years of trading experience that this might be likely to go up. So what I'm doing is I have an alert here you can see at 0.84. I just find that round numbers tend to be a little bit more easy to structure risk, and maybe they bounce more. I don't quite know why I do that. For some reason, I feel like it's nicer to enter at round numbers. So like 0.84, 0.83, 0.85. For some reason, I don't know. I'm just saying, for some reason I like it. If price goes down to here, let's look at what the situation would be. That will be a huge move in one direction with virtually no pullbacks that whole time. Huge move, right? We've had price went down here at a pullback, went all the way down here, at another pullback, went all the way down here. I would just feel like price would have the likelihood to bounce here. You know, maybe not all the way to the target, but pretty close to it. So if we come down into here to 0.84 and we kind of start pausing with a little bit of candlesticks with some bullish wicks or something, or perhaps sometimes I'll just enter immediately. I think I'll probably be getting long here on Euro GBP this week if it can happen here pretty soon. Now stop loss all the way down here. For me to be wrong and lose $30,000 to $50,000, which is the average amount of money that I'm risking per trade right now. And again, not every trade is a stop loss and not every trade is a full take profit. There are trades where I'll only make 15, 20K on them, whereas I risk 50K. Call that, you know, negative risk to reward. Go rage in the comments, whatever you want to do. I'm just saying, like, trading is very nuanced. There's a lot of context involved. Anyone trying to make it look like it's just outright easy and it's going to the same exact thing every single time is just massively underestimating the reality of how complex trading can be, which is why I still vouch for people to just try to keep it simple. My simple trading approach is like buy when I think it's going to go up, sell when I think it's going to go down based on my experience. It's that straightforward. So if it goes down here, I'm going to look to buy. I think it would be very unlikely to go all the way down here with no pullbacks and touch the stop. Meaning if it goes down here and then I buy, if it keeps going, like let's say it goes sideways for a second, and then it goes down further, makes a new low, but then it bounces right there and pulls up, that's probably a trade I would just cut at break even. And then I would just wait for another huge sell off to take out the low. And then I'd look to re-enter the same essential trade just again, but down there. Because then if we didn't bounce up here and I was able to get it at break even and it wasn't a big deal, maybe it'll bounce down there and I'll be able to make another profit. Not another, but maybe I'll be able to actually make a profit. And if the first trade was a little bit of a loss, generally if you just wait for price to make a new low, in this case for buys, I can generally just break even on a total trading outcome, having lost the first trade, a little bit of money, and then made profit on the second trade. Sometimes they'll come out to be essentially break even or even a little bit of profit depending on what the total P&L was. That's kind of how I would manage something like this if it went into drawdown. Guess what I'll do if it goes into profit? If it's just straight bull candles going up and 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 up, I'll just hold all the way to the target. If we have a nice move up, then we start kind of slowing down and price has a little bit of a pullback, tries to go up again, hits the high, fails, then kind of starts ranging. I'll probably just close right there before the profit target. That is my general framework for this Euro GBP potential trading opportunity. We'll see if she sets up. It doesn't look like she's continuing that lower right now, but who knows? If she'll go, she will. If it goes up right here and I miss the trade, I'm perfectly fine with that. I prefer to just get really good entries. It's not like I'm over here risking $100 per trade. I'm putting my money where my mouth is, and I'm doing it live in front of 61,000 people in the Telegram channel, and in the Nix Trades group, there's a couple hundred people in here that I trade live to every day. It's where I call my actual trades that I take. In the Telegram channel, I just share analysis. Here in the Nix Trades group, I literally, I call the exact trades and everything. See, even when I'm adding, I'm like, I added another short position to this trade for a total risk of $40,000. So that means if all these trades go immediately to stop loss, I lose like $41,000, $42,000. I share every single thing live. For me to be able to risk that much per trade, everything just has to be perfect for me. It has to all line up based on my experience and discretion and intuition and discernment of price action. It has to literally be perfect. Otherwise, I just won't take a trade. And that usually just means I take 1 to 2 trades per week, if that. There's a period of time a month ago where it was 3 weeks and I did not take a single trade. Everything was going sideways. I didn't see anything good. I looked back on the data and I found that had I even taken a trade, half of them might have ended in roughly break even if I was lucky, and the other half of them would have, as a fact, ended in loss. So I was able to protect all of the profits I've made over the past few months, which right now we're getting close to $200,000 in profits just from FX alone these past like 3.5 months. That doesn't even count crypto or stocks or anything else. It's the reason I can do this is because I have to make sure I'm putting my money where my mouth is and risking a lot of money on each trade. And that just means only taking trades I think are very likely to work out. Here's the last trade we'll look at today. GBP CAD. I think at some point soon this is going to bounce and go to the downside. I just don't know where. Right now I'm going to keep the alert at 1.76. I had it at 1.77, but I think 1.76 would be fine. For some reason, I feel like that would be perfectly acceptable. This thing, I've been in and out of this thing twice. The first time around break even, and the second time of a small. Actually, no, the first time was a small loss, and the second time was a small loss. So in total, like I'm down on this, or it might have been a break even. I can't remember. It's in the Knicks trades group. You can go look for yourself if you're in there. Here's the reason I was looking to get short in this trade to begin with, and why I'm still looking to get short in this trade. We've made a higher low, and then a higher high, higher low, higher high, higher low, higher high, and now I think price will pull back to potentially make a higher low. So if it does pull back and I'm short and the stop loss is like somewhere really far away, it's in a galaxy far, far away, somewhere like up here, and the target's like, say, down here. A trade like this with like a 1-to-1 risk reward ratio, that's a place where it's, good enough entry. A stop loss that's very unlikely to get hit, in my opinion, from my experience. And then a take profit that is very likely to hit. Because every time price has gone up and made a new high, it's had these like nice like sweeping pullbacks. Like it had a big pullback there, had a little bit of a pullback here, big pullback here. Now we've gone up here. If we pull back again, like the same amount, that'll be a target hit. And if I've risked like $50,000 on this trade, better yet, if I enter up here, it's even more likely to reverse and hit the target, and it's even less likely to hit the stop loss because I've waited even for an even better entry. That is why I'm so patient and reserved and reluctant to just FOMO into trades immediately. I really like to just wait for setups that I think are really, really, really good. The best setups I've found takes me like 5 seconds to analyze. This yesterday, one of my clients actually pointed this out on a live session. He was like, what do you think of USD MXN? He was wanting to continue holding his buy positions. I took one look at this yesterday and I was like, oh, this is a great trade for a sell. I'm getting into this right now. And I did. On that call, within a minute, I was short on this pair. I called it out on the Knicks Trades channel here yesterday. I'll show you where I called it out yesterday. Here it is. 8:39 a.m. I'm going short on USD MXN. This is where I called it out at. So 18.5, that was my entry. Here's a screenshot. I always show screenshots of my chart and screenshots of my terminal. That way, like everybody can see everything, right? You can see there's the balance equity, there's the free margin, the margin percentage level used up. Total margin that I'm using is $60,000 because it is 6 standard lots. And you can see all the positions, all the entries, all the P&L. As I add to it, like right as the day progressed, like it was like continuing into a lot of profit. This was like last night or sometime yesterday. It went all the way into like $11,000 profit. And now it's since pulled back a little bit and we're kind of floating around the entries. It's in like 3, 4, 5K profit right now. I share literally everything in there. The Knicks Trades group, MFX Knicks Trades. That's in Discord. And then the free Telegram channel, I just share all my insights and analysis and stuff like that. That was that GPP CAD trade I was telling you about. That's when it was actually in profit. And then it ended up coming back for like break even or a small loss. I think I lost like $2,000 on it. Pretty much a break even. But that's why I risked $40,000 on this USD MXN trade. And that is why I'm looking to take Euro GBP and GBP CAD. Trading is complicated and trading is risky and most people lose money. That's why I think that a lot of people are best served by keeping things simple and controlling risk. If you enjoyed this video, good. See you in the next one.